Welcome back to the Hunter of Dividends YouTube channel. What a day here on the stock market. Just a massive down day. As you see, the Dow is down almost 1,200 points as I record this with about an hour left in the trading day here on May 5th. Wow. It's a lot to digest with the Fed raising rates by 0.5%, and then the market having a big rally yesterday and then dipping big time today. Look, I'm going to be honest. I like these red days because as a long-term dividend growth investor, I want to try to find stocks at a valuation level that I feel like is going to be good long-term value. It's been hard to do that in recent years. I do think that there are more dividend names that are quality purchases now than what there were in recent months and years. But check out my channel for my other videos on stocks that I've been buying here lately, and I'll do a portfolio review sometime here in the coming weeks as well, as I try to add to my portfolio day by day here as the market drops. But let's take a look here specifically at Dick's Sporting Goods today. Ticker symbol DKS. This one's down over 5% right now today. Dick's has had a difficult run here of late. The 6-month chart shows quite a bit of pain from the top in the 140s down to 97. The 52-week low was actually 82, which was all the way back at the beginning of the period. So it had a really nice run up to 147, and now it's dipped back down to 97. Dick's is really an interesting example because we look at some of the fast facts on it. The current yield, 2% exactly. The 5-year dividend CAGR is 21%. Very fast growth of the dividend on that one. Simply Safe Dividend safety score is 80. That's safe, and that's a really good rating. Simply Safe Dividends does a great job. I love their information. It is pretty expensive, but if you're committed to long-term dividend investing, I think it's a good investment. The current PE ratio is just 7.7 for Dick's Sporting Goods. I'll talk about that more here in a minute. Earnings have been inconsistent here. I do think the PE is likely a bit misleading. The net debt to EBITDA is only 0.61 for Dick's Sporting Goods. So they've done a really good job paying down debt recently. I'm impressed by that. For me, the cons about Dick's Sporting Goods are inconsistent earnings and recent EPS growth that's likely unsustainable. I also think this company has no moat. I hate to invest too much in a company that has no moat. For pros, I think this is a good valuation, even if earnings do back off quite a bit. I also think that sporting goods are not likely to be an area where spending collapses if the consumer slows down. Some are worried about a recession with a hard landing from the Fed. I'm not going to make a prediction on whether that'll happen. It certainly could. It's a tough spot for the Fed to be in here. But I do think that sporting goods will continue to get pretty good spending numbers. Let's take a look here at the Simply Safe Dividend profile of Dick's Sporting Goods. This is a company that they operate 730 sporting goods stores. 1948 they started. They were changed their name to Dick's Sporting Goods in 1999. This has really grown quite a bit. It has not been a dividend payer here until recently, and now they've really gone after the dividend growth quite a bit. The 7-year streak here of increases with a 21% CAGR over the last 5 years, like I said. Let's take a look at this, though. You see that the forward PE ratio has been all over the place, the 7.7 right now. Look at the earnings payout ratio, which was 30% just a couple years ago, 10% this year. The free cash flow payout was 51% just a couple years ago, now 10% this year. Look at the earnings per share here for Dick's Sporting Goods, around $3 a share pretty consistently. Then it jumps to $6 per share, and then $15.70. What a jump here. Certainly COVID and the different kinds of trends based on people buying more things such as bikes and being able to get out. And there's been a lot of demand for things in sporting goods so people could get outside and do things. I think that plays a role. Dick's Sporting Goods has done a good job with return on equity during this time. Sales have gone up, but they're not up nearly as much as what the earnings per share is. So it's interesting to see the sales growth at 10, 28%, earnings per share 157, 168%. I think that This is one where it's a complicated decision as to whether to buy Dick's Sporting Goods because, like I said, if you go back and look at their earnings per share in the past, $3 was pretty consistent, and then it jumped to $6. Where do we think this one's going to be as it settles back in? Because 1570, I don't think is realistic. So if you just say the PE ratio of 7.7, I think it may be a little bit misleading. With the market at where it is right now and the unknowns about the stock market, I'm going to pass on Dick's Sporting Goods right now. I do want you to let me know in the comments, what do you think of Dick's Sporting Goods? Do you think this is a good buy at this point? Would you hold off on this one? This is a high beta stock with a lot of volatility and question marks to me. I feel like there are better buys out there. Couldn't blame anybody if they bought this one because I think it is a pretty good value at this price level, but it's not my favorite. And like I said, there are a little bit too many unknowns for me. So what do you think of Dick's Sporting Goods? Leave a comment below. Give this video a thumbs up if you appreciate this content. I certainly appreciate all of you who have been giving it a thumbs up, subscribing to this channel. I love seeing the growth of the channel. I know it's still small, but it'll take time. I appreciate everybody who has joined me also on Twitter at Hunt Dividends. Over 3,000 followers on there, and I've been chatting with some of the other dividend investors. My DMs are open, always open to chatting about dividends. This is a side project for me that, my degree was in investing and finances. And whenever I get a chance, I love working with things like this, trying to build up a dividend portfolio that will pay the bills in the future and help me get more freedom, because I think that is the ultimate goal. So appreciate everybody tuning in. I hope you have a great rest of the week. Give this video a thumbs up and subscribe, and I will see you next time.